It's one of our favorite segments, Thomas Hughes' top 5 stock picks for the new month. MarketBeat analyst Thomas Hughes is here. Thomas, one of our favorite segments, and I'm excited we get to do it in person this time. The difference this time, though, we're not only talking about a new month, it's also a new year, and this list is a little bit of a contrarian view about what's going on in the market right now.
Headlines in December are telling us that the AI bubble has bursted, and nothing that I see aside from those headlines confirms that to me. The AI trade is not over. Money is still flowing into these markets. The outlooks are swelling. Analyst coverage is swelling. Institutions are buying. So whoever it is that's selling their AI stocks right now is maybe making a mistake. Profit taking aside, you want to take profits when you can. But to me, the December weakness, this correction we've seen in the S&P 500 and in the Nasdaq and in AI stocks in general is absolutely a buying opportunity.
Yeah, that is what we're going to see when we look at your list right now. So let's dive right into it. The first one is no stranger to our viewers. What's the first stock that you're buying in January?
That's Advanced Micro Devices. Advanced Micro Devices is so incredibly well positioned for the coming year. It's taken some time for the AI trade to really reflect in their results, which is being seen this year. But in the second half of the coming fiscal year is when they're really going to have a game-changing event. That's when they will launch their MI450 line. And what I expect to see in January and in the first quarter of the year is for that news cycle to affirm this outlook and to continue driving market sentiment and to drive the stock price higher.
You've been talking about this new product launch for a while. This isn't the first time you've talked about it. What is the actual timeline for that? How soon will this be coming out?
Well, it's supposed to be launched in their fiscal third quarter, and it will be reflected in their results in that quarter. And this is a significant launch because MI450 is a rack scale solution. Up until now, AMD has not had a rack scale capability for data centers. So NVIDIA had commanded the largest market share because it was able to deliver hyperscale quality solutions to these big data center companies. AMD was kind of lagging in that regard. They've been working very hard to fix that. The MI450 line is the culmination of that work. When they launch the product, they will then be a viable competitor for NVIDIA. So all these hyperscalers, Google, Amazon, Microsoft, Oracle, all of the Meta, all the ones building data centers will be able to have choice, not just NVIDIA, but also AMD. The channel checks show that demand for GPUs is so great that AMD will be able to sell as many as it can make and not impact NVIDIA's outlook because the demand is exceeding supply by like 10 to 1.
Okay, I have a little bit of a contrarian question here. Just wondering, is AMD too late to this? And NVIDIA, do they already have all of the market share with those hyperscalers, with the data centers? Is AMD too late to try to be capturing some of that market share?
Absolutely not. They've already exhibited a few early commitments for their new product, which affirms to me that it is a hyperscale solution. There are so many plans for data centers to be built. As I said, the demand is so great. NVIDIA can keep selling GPUs, AMD can sell as many as it wants to, and there will still be an unmet demand.
All right, you make a good case for that. I want to look at the stock a little bit first before we move on. And AMD has not necessarily had a great end to the year. They've had a strong 2025 in general. It's been a really good year for the stock, but December has been cool for a lot of the names we have on this list. What are your thoughts about how soon we could see that turnaround?
I think it could happen pretty soon. This stock price pullback is profit taking. That price surge was pricing in this outlook that I've been describing. What we're waiting for now is for time to pass. It's going to be a quarter or two before these things start happening. That gives the market a chance to just kind of sit there and stew. And so what's going to happen is we'll have some profit taking and some risk averse traders and investors getting out of the market. But this price pullback is finding support at critical levels in alignment with prior highs. To me, that's a very strong, solid support indicator. And in the coming year, I would expect to see that be a launch pad for higher prices.
Very good. Well, Thomas, I know you have 4 more names for us today of your white stocks you're watching for January. You've also put together a list of the top 10 AI stocks you're watching for 2026. You can scan the QR code or click the link in the description. If you haven't checked out this report yet, it's really interesting. These are 10 names, and it's a little bit more in-depth of a report that Thomas put together of the AI stocks he's watching for the new year. So check that out too. All right, let's move on to the second company on your list. This one's exciting simply because they just fairly recently reported.
Right, this is Micron. Micron, to me, affirms without a doubt that the AI bubble has not burst. Its December report was of NVIDIA quality, outperformance on top of bottom line, significant margin improvement. The guidance was also very hot by several hundred basis points. They're forecasting accelerating and strengthening trends in the coming year, so guidance is probably cautious. And this is all tied to HBM memory. So in their report, they reported record results in all their segments, but specifically in data centers and cloud and AI. All the GPUs that are being sold by NVIDIA and upcoming by AMD require multiple stacks of HBM chips. So the demand for these GPUs is so great that HBM supply has been wiped out. There are shortages throughout the system. It's affecting other markets besides AI, including automotive and mobile. So in the coming year, there's going to be that demand crunch, but also price increases because there's not enough supply. Prices are going up. The last that I heard was a competitor raising its prices by 60%. Product shortages are expected to linger into 2027. So we're looking at 4, 5, 6, maybe 8 quarters of undersupply and high prices supporting this company's growth and its profitability, which is also very significant.
That's a lot to break down and a lot to talk about. I also think the chart is interesting, but we'll get to the chart in just a minute. Let's talk a little bit more about the competitive scene that you're talking about. Where does Micron fit in on the AI story, and what are some of its direct competitors? Is there enough market share for all of them?
There are competitors in the HBM market. Micron's product is viewed as superior for its capacity and its performance. Within that, there are shortages in the market, so right now you can make as much HBM as you want and you can sell it because people need it, and that's underpinning the growth outlook and it's helping to keep prices high.
Interesting. Was there anything about a backlog coming out in the report that just came out in December?
I didn't hear anything about a backlog, but the guidance is robust. The guidance was 2,700 basis points above expectation. So they guided for $18.4 billion in revenue for the coming quarter, $4 billion more than expected. So that's just a phenomenal number. To me, that kind of outperformance tells me that the market was just not paying attention, or if it wasn't taking it seriously, certainly did not price that into the stock price. We see that in the post-release action. I think it's very bullish. I think that this stock is going to have a very significant rise in the coming year.
This is going down a rabbit hole a little bit, but you made a really big claim that Micron's story to you is enough to say that the AI bubble has not burst yet. And I think that the question that I have, or the thing that really comes to mind when we talk about this, if the forecast was off that much, is that just another sign that really Wall Street doesn't know what to expect from these AI companies?
I think that's a fair assessment. I think what it is Wall Street analysts knew that we were going to have a strong report, but not knowing how strong, they're hesitant to lift their targets, and that kind of played into the amount of outperformance that we saw.
All right, well, Micron is one I'm thinking of for Bridget Spies, but I want to hear some of the other ones first. Let's get to the third name on your list.
Right, the third one is Oracle. Stocks that have been under pressure in December, Oracle is the poster child. This stock is down hard from its peak, but again, this is a market that rushed into this phenomenal story. The stock price surged. We have huge gains. Now it's profit taking. The profit taking has brought the market down to these key support levels that are still holding. In the meanwhile, the outlook is still swelling. So part of this correction was tied into the results, which were a little bit weaker than expected. Very high bar, being led by the RPO. The RPO is the remaining performance obligation. This is an indication of future business yet to be booked or yet to be billed. That number has been advancing and accelerating over the last few quarters. In the last report, it grew by 450%. 450%. This is a leading indicator that says Oracle's results are going to be accelerating quickly over the coming years. They're currently in the process of doubling their data center footprint, and recognizing this revenue is only a matter of those data centers coming online.
All right, this one is so interesting because it's a very contrarian pick because Oracle's had such a volatile end of the year. And volatile in both ways. It went down sharply. It also went up sharply pre-October, I believe, when it had that 14% jump. What is with all of the volatility in this stock? Is this, again, another story of Wall Street and the market really trying to figuring out what this company's worth?
Oracle was a legacy tech company. Microsoft was a legacy tech company. Oracle has made a shift into the cloud. That cloud shift was pretty critical because it set it up for AI. And right now we're trying to figure out where Oracle stands in the AI ecosystem. It is critical to infrastructure, but it also seems to be pretty critical to application because Oracle is going to embed AI throughout its stack, all 3 segments of its product stack, which means that a company, and they're going to be chip neutral. They're going to use AMD chips, they're going to use NVIDIA chips, they're going to use Broadcom chips, whoever chips they can get, because they want to provide their clientele with choice and opportunity. So as a business, as an enterprise, I'll be able to go to Oracle, use their database systems, and have access to any AI model that I want, using whatever kind of chips that I want, to build whatever kind of application that I want. So it's possible that Oracle will just be like a one-stop AI shop in the near future.
One-stop AI shop is a good point for this one, but I'm wondering, is this something that's going to be a reoccurring purchase for these companies? Is it a long-term growth story for Oracle, or is this you purchase it, you're done with it? That's one question with this.
All right, it certainly is a long-term growth story because first you have to purchase the services, but then you have to continue to use them. These are going to be long-term contracts, and the way that the outlook looks now, demand is going to be continuing to increase. So there's going to be new clients, but also penetration of existing clients. So existing clients are going to be adding services while new clients come on board, and that will sustain the growth.
One more question just for viewers out there is, what can you expect for risk with Oracle? If you're buying in January, is it smooth sailing from here on out, or can you expect a little bit more volatility as Wall Street is still figuring out this company?
I think there's still going to be volatility. As far as Oracle goes right now, it seems like the downside is pretty limited as we come into the new year. So it does look like a good buying opportunity now.
All right, let's get to that fourth name on your list for January.
Right, that's Apple. Now, Apple for me kind of is a contrarian play because it hasn't really done that well with AI. A lot of the criticism is that it's kind of just not doing anything with AI. It's like, what is Apple doing with AI? So I think that a catalyst for Apple in the coming year will be what it decides to do with AI in its stack and its offerings. That will certainly be a catalyst. But in the meanwhile, it's still doing very well. It's got very strong iPhone sales. It's been growing. It's producing pretty strong margins. And as far as tech companies go, this stock has been moving higher in December versus the other ones that have been moving lower. It looks to me like we have a little rally in place, some consolidation, and I think that January could be a pretty good month for the stock.
I think you make a good point and a good case for the year ahead, not just January, but I think everyone's been waiting to see what is Apple going to do with AI.
Right.
I think if that comes out in 2026, it could be a big deal.
Oh, for sure. I mean, because Apple is the leading consumer tech play. We're really just waiting for them to come out and like snatch all the glory. I mean, this company has been the leader forever. If it's unable to follow through with AI, it could have a long-lasting, lingering impact on the business.
Yeah, that's the risk with Apple right now, is that it seems like a long wait for something that so many other companies are already rapidly progressing on.
One thing that I'm kind of banking on with this is that Apple is working on this thing in a kind of a quiet manner, and when they release it, it will be more of a finished product than what we've seen from some other companies. We've had plenty of models come out and they're not quite as good as we thought they were, don't really do all that they're supposed to do. I think Apple will be the one that comes out and produces the most completed finished product at first release.
We've heard from other analysts we've had on the show in the past who said the same thing about Apple, that this company has always executed so well, but not necessarily early. There's been other companies who are first to the technology that comes out, but Apple just does it so well that they win.
Apple is about quality, they're about chic. So when it comes out, it'll be cool, it'll be good, and people will want to buy it probably.
All right, well, we'll see if that's in 2026. Probably not January though.
Probably not in January, but I think with these stocks, Apple not so much because it's already been rising. The stocks that have been depressed have a really good outlook for January because the new year money will be going into those stocks first probably.
All right, let's get to that fifth and final name. What rounds out your list for January?
Right, that's Salesforce. Salesforce has been viewed as a leader for AI application for a long time. And like many of these AI stocks, the market's able to see way down the road to where the AI is going to be boosting the business. And sometimes it takes a while for that to actually happen. And so that's why we get corrections and volatility between the initial surge and when the business actually starts to gain traction. But Salesforce is gaining traction now. Its growth has been reaccelerating. It's forecasting a double-digit CAGR for the next couple of years based on agentic AI. And agentic AI is the application of AI. It's when businesses will use their data and their AI models to create applications to help them improve their business. And that for Salesforce is going to drive growth, but also sustain margin. Margin's pretty important for this company with its profitability. Salesforce is a tech company similar to like Meta over the last few years that's kind of shifted from this pure growth story to being more of a blue chip legacy tech company with dividends and share buybacks. And I expect to see that also be improved in the coming year.
Now let's look at Salesforce chart. I think they've had some volatility too this year.
Certainly they have. They've been giving these good reports that spur the market to buy, but then there's no follow through. And the market's kind of been bobbing along the support level until this last report where we got a really pretty strong solid move higher. So to me, it looks like the volatility may be ending. And if not ending, it's shifting to more of a bullish bias to where the market is more buying this stock now than consolidating it or taking profits.
I think this is a good point for not just Salesforce, but all the stocks that we talked about today. It's interesting when companies have strong earnings reports. They show we have demand for our product, our company is growing, we're doing well, and then investors get excited and then they forget about it. Can investors be satisfied with an earnings report that's strong? I mean, it seems counterintuitive to have a strong earnings report and then have a pullback in the stock.
Well, right, because the market is a forward-thinking beast. It's trying to front-run prices and buy things before they go higher. So when we have an expectation for strong results, the market's going to buy into that. If the results are only in alignment with expectations, even if they're very strong, it's just what the market was expecting, so that's not a catalyst to buy. So the market's always going to want something more, something new, something bigger to inspire it to want to put more money on the table.
I feel like that's what our investors want to hear too, right? Something more, something new, and that's why we have different stock ideas every day and every month from Thomas.
Absolutely.
Thank you so much for breaking these down for us. I've got to pick one to add to Bridget's buys. A lot of good ones here. I have not added Micron to my list yet though, and I do think I want to add that to the list.
I think Micron's a good choice.
I'm a little concerned just because of how much of this stock has already run up. They're doing really, really well right now. That earnings report had some more interest, so I'm adding it at kind of a high point for the stock. Any thoughts there?
I think it's a fine place to buy this stock. Micron's chart to me shows a rally and consolidation, which is a continuation signal.
Yeah, if all goes well, at least we hope that's the case.
That's the forecast. We'll see what happens.
All right, Thomas, thank you so much for your time today. Let me know your thoughts in the comments. Are you interested in one of these more than the other? Do you think that's a good one to add to Bridget's buys? I'm really curious. And are you maybe opposite of Thomas's view on these AI stocks and where they might be headed in the new year and in January? I'd love to hear your thoughts in the comments. Thanks for watching. As always, happy investing.